You're listening to the Millionacres Podcast. Our mission at Millionacres is to educate and empower investors to make great decisions and achieve real estate investing success. We provide regular content and perspective for everyone, from those just starting out to seasoned pros with decades of experience. At Millionacres, we work every day to help you demystify real estate investing and build real wealth.
Hello, this is Deidre Willard, an editor at Millionacres and the host of the Millionacres Podcast. We publish dozens of stories on millionacres.com each week, and we also put special video features on our YouTube channel. And I want to highlight a few of those for you today, because one of the things I'm most excited about right now, and I think this is true for just about everybody in real estate, is watching how the country reopens. So one of the places that will benefit from this most immediately is Las Vegas. I'm already seeing conventions go back there. I know people who've already traveled to Vegas. Vegas is happening right now. I talked to Ed Pitoniak, who is the CEO of Vici Properties, recently about this on Motley Fool Live, and let's check out what he had to say.
A year ago this time, obviously, the assets were closed. And in fact, I think at this point in early May, it wasn't even clear when the Las Vegas assets were going to reopen. And they didn't really start to get reopened until I think it was later June. And obviously had to operate under quite severe capacity restrictions for much of the rest of 2020 and even into early 2021. And what has been so gratifying to see for our operators who have been working so hard and working very hard all this time to operate safely is that business really started coming back in March. And that was obviously a function of a few things. Obviously, vaccination had started to achieve critical mass here in the U.S. And I also think, frankly, by then, Deirdre, the U.S. consumer was ready to get the hell out of the house. And that trend has continued into April. I just happen to have CNBC on the background, and they did refer to a number of operators saying that April is the best month they've had since 2013 in Las Vegas, which is really remarkable because so far, of course, Vegas is really relying principally, if not almost exclusively, on the leisure traveler, right? The convention and trade show business hasn't quite fired back up yet. It's going to very soon, starting in June. But clearly here in the US, we've got a lot of people who feel, rightly so, I've been locked up for a long time. It's time to bust out. And Vegas is probably, I'm speculating here, Deirdre, but I'm guessing Vegas is probably the hottest tourist destination in the US right now. Because the great tourism cities like New York and San Francisco really aren't still seeing tourists. Orlando's obviously seeing tourists as Disney World begins to reopen. But that's a family-based tourism experience. And I think Vegas right now is leading the way in terms of the leisure recovery in the US.
What he mentions about it being leisure travel, I think is important because we aren't seeing a lot of convention travel yet. The growth we are seeing in Vegas and across destination locations all around the U.S. is really just individuals traveling so far. Places like Las Vegas, Orlando, Chicago, and New York City should all see a second boost of activity probably in September or October, because that's when I'm seeing people really start to be scheduling conventions. I've been talking to a lot of convention planners lately, and I'm hearing about hybrid conferences to some extent, but especially the real estate folks I know are really looking forward to in-person conferences starting in the third quarter of the year. So that is just a trend that we're going to keep an eye on. So as we emerge, what do we want to do besides travel? I'm hearing a lot about revenge travel and revenge spending as trends that are happening. And one trend that I'm really focused on that I believe has big implications for real estate is wellness. Wellness takes so many forms. And this is one of the longer tail trends that I believe got accelerated by COVID. So here's why. You've got the demographics of the aging population. Everyone's been talking about that for years. Baby boomers change every phase of life they go through simply by the size of that generation. Right now, you've got baby boomers who are focused on maintaining longevity and also the quality of their lives. And at the same time, you've got a younger generation who's interested in appearance, fitness. A lot of that is playing out on social media, including Instagram. And so how does this work in real estate? Well, it plays out in a variety of ways, but especially in retail. Wellness is going to be important to retail going forward, and it's already happening in two key ways that I'm keeping an eye on. First and most important, I think, as a short-term trend is we are going back to the gym. For more on this, check out what Taj Adav, CEO of LeaseCake, a platform for commercial real estate lease management, has to say about the increased demand for boutique fitness.
On the retail side, like on a retail, like a shopping center, it wouldn't necessarily be the full service size. We do see that, but I think if you look at, let's say it's a rowing club or a different kind of gym, but Pilates as an example, where you can control the number of people, and it's a very kind of a 1 to 5, very structured kind of training. That's we've seen is quite successful. So it's a fascinating mix. Again, it's the bigger ones like we see Planet Fitness, Anytime Fitness. Those larger footprints are really growing strong because they're taking advantage of weakness. But also smaller, kind of newer concepts on the boutique side are winning as well, simply because of the how they can manage the number of customers that are walking to the door with a really curated, controlled experience, gives safety and comfort for their guests and their staff.
Before the pandemic, boutique fitness was really growing. You had these national brands like SoulCycle and Orange Theory, as well as independent spinning, Pilates, and other classes, snapping up space in shopping malls and centers. Then we were all stuck at home, and Peloton, which was already growing, took off like a rocket. I'm not a Peloton investor, but a bunch of my colleagues at the Motley Fool are really bullish on it. I believe in the stickiness of that community, but I also really know that people want to get back to classes with instructors in person. This is something I think is going to fluctuate, and another thing where hybrid plays a role. People may take some classes at home, some classes in person, and the brands that will thrive, we're going to say the word that keeps coming up in retail, they have to have omnichannel ability. And so you're going to see omnichannel in just about everything. Retail stores, certainly, but even in fitness, people will do some of their classes in studio and some of their classes through apps online and on their phones, of course. And another thing that Taj brought up when we were having our conversation is he taught me a new word for a trend I've been seeing for a long time, and that's medtail, which is medical plus retail. This has been a trend several years in the making on the med spa and the cosmeceutical, that sort of cosmetics plus pharmaceutical side. But the mall in the future is probably where you're going to have your doctor visits and other personal appointments. I think this is really going to start taking off, and it's good news for retail real estate. This is part of that wellness trend that's going to get an uplift in our post-pandemic world. Certainly a lot of people canceled doctor appointments last year, elective surgeries, and elective procedures. People are going to be going back to those in-person appointments to optimize their health, well-being, and appearance. Let's take a listen to what Taj had to say.
We're not really seeing the pop-up shops in terms of selling direct-to-consumer goods, but certainly direct-to-consumer personal services, like you mentioned, cosmeceutical. I mean, personal services, get your teeth whitened. I mean, kind of the quicker turn areas. I think there's definite potential, but it's like, how do you maximize your real estate footprint? So we're kind of seeing the gamut. But again, I think it's really the landlords who can be creative with their mix and be more appealing to different types. That's what we're seeing. Like, we're seeing the growth on the fitness category, believe it or not. This is kind of where the strong get stronger. Personal services, massage, tanning, nails, all of that is definitely a pretty big angle of what we're seeing, certainly from our side, on the software side.
This is sort of another side of what is the broader trend of retail becoming more experiential. This was another shift that was happening before the pandemic, then it stopped. Now we're back to going to retail places, not just because we need to pick up essentials. We already know we can do those on our phones and on our computers, but because we want to have an experience. I'm seeing this trend play out across grocery too. We learned in the pandemic what we don't need retail stores for. Now we get to figure out what we do want them for. So what does all of this mean for you and me, the average investor? I think there are two things. First, don't believe that retail is done for. It isn't. It's evolving. Yes, there will be more chains that go Chapter 11. There are some malls that may go back to the lender, but retail itself as a sector isn't done. People aren't done going to stores. And if you're a REIT investor, keep an eye on the reopening REITs in retail and hospitality. Matt Frankel, our REITs expert at Millionacres, recently chatted with Abby McCarthy, who is NAREIT's Senior Vice President of Investment Affairs, about this.
It's obviously difficult to forecast the future when you're talking about stock performance, but I think what we see is still quite a bit of upside. So, for example, in the lodging and resort space, we do know that there has been a lot of improvement priced into the hotel REITs returns recently, and they've seen great performance. But we also know that there's still some constraints in that property sector. We do anticipate leisure travel to pick up quite robustly in the next couple months as people have delayed or canceled weddings or family gatherings in this past year. And as more of the vaccine rollout continues to happen, we do anticipate leisure travel to increase quite a bit. Business travel, I think, will still stay somewhat constrained. We've seen some recent surveys that have suggested that only somewhere around 65% of folks believe that they will be traveling for business in the second half of this year. So I think that really allows for more upside potential in the lodging space going forward as we see that leisure recovery and then eventually a business travel recovery as well. Other sectors that I think are really poised to do well are any of the sectors that have to do with housing. And I'm talking about apartment rentals, single family rentals, and manufactured homes. We're really seeing a tremendous amount of demand across the housing space. Most of the REITs in the apartment sector own very high quality apartments in major metropolitan areas, which I think some people felt at the beginning would see, as people kind of fled to less expensive areas, that there would be some stress there. But really, I think what we've seen is that those occupancies have stayed consistent, that the tenants in a lot of those properties tend to be those who can also manage working from home. And then going forward, I really think that we're seeing in the single family rental market a tremendous amount of demand, as there is a significant portion of Americans who are not ready or in a position to buy a home, but would like the space and the extra amenities that being in a single family rental provides you. So we see strength in those sectors. Also, what's a bit surprising right now is that retail is seeing quite a bit of bounce back strength. We are seeing that as people are becoming vaccinated, they're actually returning to malls and especially regional shopping centers where many of the businesses have already reopened or have been able to reopen with some sort of COVID restrictions in place, but that actually make it viable for people to shop, eat, and return to those centers. So those are the three main sectors that we really are seeing strength right now.
What Abby had to say about conventions mirrors what we heard from Ed Petoniak at the start of this podcast. The next few months are going to be very interesting to watch, but what I and most long-term investors should be thinking about is what's beyond the reopening and what the future looks like over the next few years. Thank you for tuning in to this update. Just a reminder, we release new interview podcasts each Tuesday. You can always contact me at media@millionacres.com and check out our interview series on YouTube. Stay well and stay invested.
Thank you for tuning in to the Millionacres Podcast. I hope you liked today's show. If you enjoyed this episode, please consider subscribing through your favorite podcast provider. If you have any questions, please feel free to drop us a line at help@millionacres.com. Stay well and stay invested. People on this program may have an interest in the deals, offerings, or services they discuss that Millionacres or the Motley Fool may have a formal recommendation for or against. Always consult a certified tax professional before acting on tax advice, and do not buy or sell assets based solely on what you hear.